Hello, everybody. This is Brandon Respers, your mortgage guy, with another tip that'll help you figure out your path to homeownership without becoming a lead for a desperate mortgage broker out there who's looking for business and hasn't built the relationships that matter or doesn't have passive marketing, and it's going to spam you for the next month or two, either through phone or through email, asking you to pursue this mortgage that you weren't really ready to pursue. You just wanted to figure out who you are. So imagine in a world where you make $54,000 a year, $54,000 a year, no co-applicant. You're going to divide that annual income by 12 to create a monthly income that creates an answer of $4,500. All right, so step two, you're going to divide that $4,500 by 2, and that gives you an answer of $2,250. And then step 3, you're going to subtract your monthly debt obligations from that answer. All right. Imagine in a world where you have $200 a month in monthly debt obligations. $2,250 minus 200 becomes $2,050. You're then going to divide that answer by 0.00808, because everybody loves 808s and Heartbreaks by Kanye West. I'm just kidding. I don't know that it was the best project. I feel like it might have been his last decent project. People might disagree with me. It's proof I don't have a hairline, right? Next up. So when you divide that by 0.00808, that gives you an answer of $253,712 and some change. The last step to the equation is you're going to subtract $10,000 from that answer. All right, so that gives you an answer of $243,713 is the maximum amount of home you can afford with your current debt obligations on $54,000 a year. All right. So again, this is maxing out. I go to the gym. There's always that little dude who's really muscly. I'm not really muscly anymore. Used to be back in the day, but there's always that little dude who wants to know how much he can lift and max out, that little dude with all the muscles. And so he's got like 500 pounds on the squat rack at 5'3", and he's got a committee of gentlemen around him making sure that he's okay, and he's maxing out on that day. I no longer max. I haven't maxed out since 2000. So some disclaimers to this video before you jump into it. So one, this is a ballpark estimate. It's not perfectly accurate, okay? And then two, this is based on FHA. Why? Because FHA tends to be a little bit friendlier on DTI requirements and housing ratio and those things than VA or USDA or conventional loans. Again, it's an estimate. It's not like a 100%. Don't go into a bank fighting for your answer. But know that this should give you your max. I don't think you should ever max out on DTI in terms of buying a house. It's my personal opinion, because you got to live your life, right? You need your income to be able to support other things. So putting 50% of your income towards your debts, to me, your business. But I wouldn't do it. But again, this equation is not 100% like the answer. Okay. So another disclaimer is that you also need to consider in there how your credit score will impact pricing on interest rates, what the current interest rates are, and then your assets, right? Because if you don't have the cash to close, you can't get the house, right? Or if you don't have the right loan product, like 0% down, where you can use what would be the down payment and let that supplement your closing costs, or if you haven't negotiated with the seller in a good way where it can help you with those closing costs, you still can't get into the house. So yes, you can afford the payment for the house, but getting into the house, there are other steps, right? Don't think just because you jumped into this equation, you're gonna get a yes, because you gotta make sure all the factors align. Okay, so that would be my other disclaimer. As always, if you found this video helpful or useful, click the subscribe button. If you have any questions, leave them in the comment section. I'll make a video to answer that question, and have a great day.